All right, well, hello, active traders, and welcome to our trading week ahead episode for today, Friday, September 25th, 2020. I'm Ken Calhoun. As always, all information is for educational use only. I'm not making advice about to buy, sell, or hold. You may have seen me in Money Show repeatedly, and you may be aware that I run my live room at tradingopen.com, serving traders from around the world. You can join for a 3-week session for only $7 to try it out. So that's at tradingtheopen.com. All right, well, let's take a look at things. Enough PowerPoint. Trying to get a bounce in CBAT. I called it short off 320. Big picture, our market's been choppy as heck, right? Yesterday it was down pre-market. This is pre-market from 5 in the morning till 9:30. On the open, it ran up, then it sold back down, then it ran up, then down, then up, then way down. Today it was down, same pattern, a down, then up pattern. We have a down, then up pattern. So pre-market selling pressure followed by in-market buying pressure. Some of the featured charts of the day. The best breakout chart so far, one of our members mentioned, was Zoom Info. Really nice runner from 34.5 up to 38. It's doing a kind of an ascending triangle pattern up here. Maybe worth a shot over 38.30. Let me know too if you have any charts you'd like me to pull up. We can do that together as a team. The goal of today's session is to give you a heads up on not only trading strategies that make sense, but some of the very strongest chart patterns, and also what's going on in the broad market. So good to see everyone. A big turnout. Wow, thanks everyone for being here. A lot of familiar faces trying to scroll through here. So as I used to do, let's take a look at the broad market picture. You can see on the daily chart, the S&P, or in this case, the spiders, kind of hovering near this moving average line right here. We lost the 50 SMA. That was, it found a pivot there, but it dropped underneath it. So that's the first sign of some selling. It's slowly grinding its way down after a multi-week drop. We've got major support here at 310 on the spiders, or 3100 on the S&P. So I want to start, I'm using 300 or 3000 as a major support level in the S&P. And if it does drop under 3000, the S&P, or 300 in the spiders, I'll be aggressively going short the market. But for now, we've been in a downtrend continuation. Really don't want to swing trade stocks long in this market. Five-day breakout in INO. Up and away. Now, one strategy that I teach traders is to always sell into whole number resistance. So if one had been long this INO, my long call was 1675, and that triggered and then pulled back, and now it's breaking out again. We may see some resistance at 17. So the next entry would be somewhere over 17, like 1710. We would tighten up a trailing stop to within 10 cents of the inside market on this right here. SPI, after a big epic beatdown, looks like it may go for a bounce. I'm going to trade it today. I just have a single, I think just one trade set up for just a tiny 50 share, buy it at 1170. So if it goes up over a point from here, I'll buy in here. And the reason for that is a breakout above this previous, and this is kind of like a bull coil pattern, but it's still down in the muck. So that's a major resistance trigger, as is the previous day's low. That's why you can see it pivoted. See how it pivoted off exactly off the previous day's low? That's why I've taught traders for 21 years to use a 2-day 1-minute candlestick chart, because oftentimes those previous levels do become reality for traders. So if you buy it right now, for example, the exit target would be that line right near 12.5, right? This was the biggest runner yesterday at a big point range, SPI. PIN had been a good breakout for our members today. I called along at 66.30. when it was down here. I said we go long if it breaks 66.30. I said to sell into resistance here near 67, book a 1.6750. Anyway, ran up over a point. Now it's up 2 points. Members are given the alert at 66.30. It's currently at 68.30. Let me ask a quick audience involvement question. How many of you do all session long intraday trades like I do? Often you can either scalp the open range breakout, usually between 9:35 and 10 o'clock or so, for a 5 or 10 minute or even 2 or 3 minute scalp. That's a challenging way to day trade. An easier way to day trade, and potentially a much more lucrative one, is to put on a trade early in the morning, first sign of a breakout, put a hard stop under the pre-market low, and then walk away until at least the middle of the trading session and see what kind of price action run you can get. Because sometimes these guys will run all day long, or at least make a run into the midday. Those are 3 times to check your stocks for intraday. One is at 10 o'clock, because often the first open range breakout runs until 10 and then pulls back and chops. So check it at 10, tighten up a trailing stop. Second time is that hour between 11 and 12, because often you get midday reversals or pivots in the middle of the trading session. So something like this guy's ran up like now for us. It's done really nicely. If you're one of my live room members and you bought the 66.30 long trade, kind of late to the long party. I saw that one late, but still good for 2 points. Now would be a good time to tighten up a trailing stop to something like 68. And the third pivot time, or time to visually check the progress of your intraday trade if you're trading all session, is right after 3 o'clock, especially between 3:30 and 4 into the close. So many times, you've seen charts that run, they do a quick open range scalp, which is relatively small, like maybe 70, 80 cents, $1 or so. But if you just traded it all day long, it might run 2.5 points. So you can multiply or oftentimes get bigger runs out of all day long swings. Hey, Andy. Yeah, Moderna and AMD. Let's take a look. American Micro Devices. Micron had been stronger lately for semis. Nah. Semi is not too strong. But that's a good chart, right? That's the kind of chart I like. It's got consistent multi-point running. That's why I don't like the small cap under $10 low float BS pop and drop crappy circuit breaker halted momentum chat room type stocks. I prefer charts that have consistent multi-point runs. One of my smart members had mentioned this one to us today, and look how far it ran. I gave our traders a specific entry trigger on the way up. I won't reveal what it was, but I did call it correct long play for ZI if it continues to raise. My CBAT's, I hope it's still alive. Come on, punk. Trail stop still at, I got to fill at 236, just 100 shares, little itty bitty Friday trade, throw a dart. I threw a dart at the market. Boom, nailed it, ching. Actually, I shoot a SIG 226 9mm and a Glock 40 cal 22. Anyway, CBAT, I called it short at 320. I said to cover 260. That was a good short drop. Now I'm looking for the long, and I'm trading. I didn't short it because I'm trading this out of my SEP hours, so I can't intraday short. But for my traders who could, they were thrilled with that alert. Right, it was a nice big run. It actually ran over a full point for them from 320. I said I would cover at 260, but it was good. My next long on this guy is I'm going to buy at 77, right? Buy it at 270. I always use buy stop limit orders. And the reason I do that, here's a quick tip. For those of you who trade these horrible cheap stocks, which I hate, stocks under $10 are horrible, as a general rule of thumb. That's like the garbage disposal, the dump for stocks. But one of the protective things you want to do is if you use buy stop orders, especially on cheap instruments, always use buy stop limit orders. Who can tell me why? Rhetorical question. Circuit breaker halts. What you don't want to do is say I have a buy stop order 277, but before it gets there, it gets circuit breaker halted and it runs all the way up here. and it unhalts maybe up here or something, and you get a fill and immediately craps out. You don't want that. So you want to set a buy stop limit order. Like the window of opportunity for this is less than a dime, 277 limit 285. So that's a 8-cent window, which is wide. I should use 277, 280. But the point is use buy stop limit orders and use a conditional order flow to either hard or a trailing stop. Now this guy I'm using a trailing stop on. This guy I'm using a hard stop on. And you want to kind of mix things up. From a trade management perspective, you're always looking at figuring out not only which charts have good rock star trade potential, but how to trade them in a way to lock in a profit before the market takes it back. Because so often things do parabolic arcs. They run up and they come back down. Like yesterday, right? And a frustrating day because the up and down cycles in the stock market. You can see looking at the spiders chart. Not a consistent day yesterday. Pre-market selling, in-market buying, then selling, then buying, then selling, then buying, then selling, then buying. And then today, pre-market selling, same pattern as the previous day. That's why I use the 2-day chart, because it shows me open, high, low, close from the previous day, which is critical, but also extremely important to see how far things run before they pivot. And you can see the trading range here is just almost identical to the pre-market range here, right? 320.50 to 324. That's the 3.5 points. And this guy, 3.5 plus this would yield 323.50, and that sure enough was the exact top there. So the length of the run was identical day over day. I don't know how many of you spotted that, but that type of pattern recognition skill factors heavily into, my alerts have been so successful, and if you followed them for any length of time, you've seen the high hit rate, the ones that work out. The way that you get there is, I'll trade for 20 years and watch the dang charts go up and down for years. And that starts to get you price elasticity that's understandable. Pin gaming a firecracker. Now let's take a look at the tape. You can see we're at 6872 on the inside. It's always important to follow the tape at a previous high or at a previous low. That's the one place you do want to pay attention to time and sales, especially carefully with a close eye on whether or not it's going to continue up after you put on a trade. Now my long trigger for my members this morning had been 66.30. And congratulations if you took that. The other time to use the tape is for every single exit, regardless of where the chart is. So for example, if you were one of my members and you bought 66.30 and you let it ride, I would sell it all if it loses what? Where would you guys sell your pin if you day traded it like my alert was this morning? If you bought 66.30, where would you trail a stop? Where exactly would you get back out to lock in a big 2-point plus profit on that alert? Again, these are the alerts that I gave my members this morning. But then type in your alerts and I'll see. But I would sell it all personally if it lost 68.50 because that's a key support level. Only got a few minutes left here. Let's see what else is going on. SPI is not alive yet. CBAT slowly grinding. I bought this guy at 227, I want to say. Not a big runner, but I've got using a 30-cent trailing stop on just 100 shares. So it's just around break even. Looks like I bought 236, so trail stop was 217. So what else is hot out there? SPXL, I'd called it long for my members at 47.7. You can see the alert right there. That's one reason why my members like my room so much compared to other rooms. Virtually no other live trading room out there actually gives specific entries and specific real-time exits like I do. Other live rooms, they either have guys who are bullshitting, pretending to make $100,000 in a day trading a $3 stock. They are full of shit, and I'm sure have been reported to the SEC and the Attorney General's office. What we like to do instead is give you specific entries ahead of time before the bell, right? And then updated throughout the session for both longs and shorts. You can see the green are the long triggers to go long above those triggers. The short are the red triggers, the support levels below which to go short. And again, it's all for educational use only. It's for paper trading, excuse me, educational use. It's been a long week. Pardon me, losing my voice. I've been broadcasting all morning. The pin looks good, right? That was a great chart. Zoom info even better, right? No major pullbacks. This guy might be good for long over that tweezer top right here, 38.40. The short trigger would be a loss of the 37.6 because that's right under that little support. Like a bull coil pennant pattern here, ascending. Actually, this is a rising channel. Right, so I got a big swoop up, a rising channel, resistance at 38.40. It's too late in the day and it's a Friday, so I would not be chasing up here. I'd be looking to, I called the long on the way up. One of my members had mentioned it, and good job to that. And thanks to the trader for that. Really ran up nicely for us today. But that's the best breakout chart in the whole stock market that I can see, because it alone has had a consistent multi-point run. That's what you really want as a trader, is consistency, not the under $10 pop and drop one-hit wonders that are all over the map. You want a consistent breakout to that. Hey, CBAT's starting to run, finally. I'm obsessed with making money. This is what I do. So now I'm using a 30-cent trailing stop. Which is now 227. My next entry on CBAT's up at 277. By the way, does it help? Do you guys like seeing live real trades like this? Is that something good? Most educators are full of shit and they don't even really trade. I really trade and I show P&L proof daily of real trades I do. That's what I do. So anyway, I'm in from, and that's the only trade I took today so far that's triggered is the CBAT. And that was just recent. I didn't even trade the open because kind of choppy. So the worst I can get stopped out is a dime now on 100 shares. So a $10 stop loss. Ooh, I'm really sweating that, right? Not. If you want to trade with rock solid confidence, reduce your share size really small. Take lots of small darts at the market. That's what I do. I have a hard time from a peace of mind and mental. The older you get, the more you value peace of mind, right? Quality of life and lots of money and wonderful people, right? And the point is, it's much smarter to take a lot of small shots at the market, even with tiny stops, than it is, a 1,000 share trade with a $500 stop loss. So, well, thanks, appreciate it. How much money am I going to make? Well, if it goes up another 10 cents, I'll be at break even. I'm going to scale in at 277. That's my next trigger. But that's probably not a good entry because the exit target best case would be here, and that's not really P&L worth it from for only 100 shares. Might get lucky, it might run up to 4, but it'll probably stall out somewhere by 3. That'd be a best case exit would be up near 3. Okay, so now I'm near break even. I'm a penny away from break even at worst if it craps out and goes down. That's what you want to do is, I don't call it bulletproof trading, but playing with the house's money. You put on the trade, put on the trade, you get the fill, you have your trailing stop, and once it runs up, you're still in the red until it breaks that hurdle of the trailing stop value. Now that's one key decision, is how big of a trailing stop. I'm using 30 cents, so that's kind of wide on this cheap of a chart, but I'm only trading 100 shares, so I don't care. But I'm playing with the house's money. It'll get me back out at 235. So if it goes back down, it's a scratch trade. And I'm going to rebuy over 277. And this one, I'm using a hard stop at 230, which is actually a $47 risk. So that's kind of $50 risk on the trade. I'll probably tighten that up. But anyway, we've got shake room till 235 on this guy, and we're at 58, so we got 20 cents. We'll see if he keeps going up. But I called it short for my members here, and I said to cover it here. I didn't take that trade because I don't short. But for those who did, congratulations. Then I bought it here on the pivot long, 236 or whatever. It's kind of shaking around. Follow the tape. The old tape reading. That's another technique that can really benefit you, is to learn tape reading. For me, I've been tape reading for over 2 decades, and I did the world's first modern tape reading seminar in the year 2001 at Sheraton Anaheim, right across the street, right north side of Disneyland. I was speaking at the Traders Expo from Tim Berkwin and his colleague way back then, and that was the topic of the day. So my only trade of the day, and it's a winner. So if it gets up 3 cents, so we'll see where it goes. At least break even. That's what you want to do as a trader, is pick high percentage, favorable charts that make sense, where the risk reward numbers are there, and then use really tight entries and tight trailing stops and manage things intelligently. There's so many great opportunities to trade, and your goal is to figure out how to be on the right side of it more often than not. At a double top rollover up here near 325.70 or so, it's still in a directional uptrend. I wouldn't be going short this market unless we lose support. Got this here. That's kind of a bull flag sort of type pattern, pennant pattern up there. We'll see if we break 326 to the upside, or we break this downtrend here. But for context, that's a butt ugly stock market, right? It's been selling off for the last couple of weeks, and that's a 10-day chart of the market. So it's a descending channel, and you can see obviously it doesn't look like a lot of buyers. We may get a pop up in here, but it's more likely to end the day down here. Always do a multiple time frame analysis. You're looking at multiple support and resistance levels, and make a trading plan that makes sense based on both the macro, or the big picture, as well as drilling down into the micro. For example, early in the morning, a couple of my traders had mentioned Carnival and Norwegian Cruise Lines. And they're just okay, they're decent charts, but I prefer charts like this, or this one. This one would be a long, again, not trade recommendations, but pattern recognition education, long over, say, 38.40, or a short under 37.60. Looks like it did break the 38.40 earlier. I would still go long if it breaks 38.40 again. I'm long the SQs, but that's not working out. That's not good. But just small size, right? Got protective stops down at 26.30 and 26.20. So I'm long and wrong in SQs right now. I got protective stops and a few other really small kind of nibble positions, or small breakout plays. That's the price that proves a swing trade wrong. When something's at a 2-day low, you holler uncle and you take a small stop. What you don't do is sit in it, and the next thing you know, it's at $20 a share, and you say, wow, it would have been up hundreds of dollars that I just sold the first sign of trouble. You might remember my stocks and commodities article where I've got the kind of the inverted traffic signal type thing where for swing traders, if it stays in the middle of the previous day's chart or inside the previous day's trading range, I should say, you hold. If it loses support under the previous day's low, you start to scale out and sell. If it takes out new highs above the previous day's high, then you scale in and buy. Very easy, simple system, right? If this goes up here, you buy it. If it stays inside this range, you sell it or hold it. And if it gets down under that range by a bit, you sell. So I'm going to start scaling out of my SQs if it loses 26.30. Now, does everybody see why I put 26.30? And this was pre-market, back when this budget was way up here. Do you see why I don't sell at support? That would have been a dumb money exit, right? Just like you don't buy at resistance because you get false breakouts, you don't sell at support because often you find support right near the previous low. So this is the shakeout weak hands zone right here. Got a double bottom here. And it may still go down. It probably will, to be honest. I mean, I would expect that it's slightly more likely it would go down than to go up. But that's where I'll start to scale out of my current in the red. I'm underwater a little bit in my SQQQ. I'm in few shares, under 100 shares, so a very small position. But I will start to scale out if it loses 26.30. That's one of the best things I can teach is real money trades and how to manage exits and stops when trades go against you. Because when trades are in the money, that's relatively easy to figure out. It's when things go against you, you got to figure out how to exit with minimum stop loss and protect your capital. Looks like both positions are probably closed, right? I said to buy 77, sell 30. I may replace that. I think I'll tighten it down to 50, or maybe 40 or something. Okay, so I made all of 20 bucks on that. I bought at 236, sold 255. But I got filled at 277 and it's got a paired sell stop at 230. So I bought way up here, I bought the high, and instead of using a trail stop, I'm using a wider hard stop at 230. So I'll be a total of $27 in the red if it gets down here. I'm tempted to tighten up the stop there so the whole thing's break even. I'll probably do that. So anyway, but in the money so far in the bounces and CBAT, we'll see where it goes from here. The reason I did that is to illustrate to you not only a winning live trade I just did, I mean 20 cents on 100 shares, so made some lunch money, but also the main learning point. Like one person said, I think I was on a forum, something like I trade to teach, not so much to make a lot of money. And that's true. I do very well in my business. So I do all these trades to test out strategies for you guys and figure out what makes sense. And so, for example, I used a trailing stop on one position and I've got a hard stop on the other position. The trailing stop position got taken out and I made a profit. It's a winning trade, just 20 cents, but hey, on a $2 stock, I don't mind a almost 10% move, so that's good. And on a hard stop, in case it wants to shake up and down, you get stopped out or trail stopped out if you use tight trailing stops with shaky charts. So with those kind of charts, sometimes it makes sense to use a hard stop right under support. So anyway, good stuff. I want to thank you guys for being here. I do appreciate it. Do consider joining my live room, make live real trades in front of people and with P&L proof to support it on really small conservative size. And a final thought, there's been this rash of very dishonest young men trying to claim to be making $100,000 in their stupid YouTube videos. I call bullshit. I think they're lying. I think they're using demo accounts and something fishy's going on. And even if it wasn't, a lot of these young men, they're using stop losses of thousands of dollars. Now, I don't know about y'all, but when I take a stop loss, I want it to be under $50 or $100. I don't want to have a stop loss of thousands of dollars. So if you're the kind of person that likes, $1,000 stop losses, feel free to go to those people. But if you're like me and you like to trade frequent, like my colleague Sosnoff says, trade small, trade often. I trade really small and I trade really often because I like to nibble at the market. I like the law of large numbers. You can vary, you can use a variety of approaches, both trailing and hard stops on your positions. Where do you guys think I should replace that stop? I have 230. I need to tighten that way the fudge up. What's the tape say? 263. I'm going to use 250. Frequently, I'll say I got lucky. I bought 277, but that's going against me. So as an active trader, what I want to do is limit my risk. So I tighten up the trailing stop to 250 just now, or the hard stop. I'm manually trailing a stop now. Now I bought 277, but that went against me. And if I was doing thousands of shares, I would have already been out by now. But since it's only 100 shares, I'm using a hard stop at 250. And if I were trading size, I'd use 260. So that's only a 17-cent risk. Next long. I wouldn't play next long in this because it's getting close to the mean reversion pivot, right? It's getting near the middle of the trading range, which is around $3 a share. A momentum play would be somewhere over 3, say 305. $3.05 would be a next long. Okay, I tightened it up to 260 just now. So initially I had 230 as the initial stop from the 277. It went against me. What I want to do is minimize the cost of being screwed if this thing craps out. So I've got to stop now at 250. So, if it loses 250, I'm not going to sweat it. If it keeps going up, I'm in from 277 and it's about scratch now, which is gratifying. Let me show you P&L proof. I'm all about being transparent. So the first trade was a winner because I bought it with the trailing stop and then I want to show my account number. Anyway, so first trade, I bought it at 236 and I sold 255 for a near 20-cent profit. Made some lunch money. Next trade, I bought again at 277, and in that one I was using a hard stop at 230. I canceled that and used a tighter stop at 250. Now I tightened it up to 260. So now my downside risk is all of $17. So I'm not going to sweat it. If it gets down to 260, That'll have taken most of the profit, but not all the profit from the first trade. So I'm still in the money. So I'm playing with the house's money. So what I'm teaching can be scaled, right? Which is the important learning lesson, right? I'm not doing this all for the, $10, $20, $30 trades, but it's to illustrate the concept of using an intelligent. It's going to stop me out at 260, right? So I'll take a $17 hit on the second trade, but I made it more than that on the first trade. So at worst, I made a little money. So that's good. That's what you want. At worst, you make a little money. And at best, if it runs up, don't you hate that? It's kind of like on the razor's edge. I'm going to get a fill at 260 if it drops. I'm in at 277. I love trading. I've been doing this since 1999, right? I've been doing this 21 years. It's still a thrill. Never gets old. Hey, Kurs. Let's see. Thanks. Have a great weekend. Looking forward to mid-October for live room. Yeah, it'd be a good time to be trading, especially as we get closer to election season. So it looks like I'll probably get the fill at 260. I'd give an 80% chance of taking out the 260, a 20% chance of a bounce. I think it's going downtown. So I want to use a tight 17-cent stop, right? Which is tight. 17 cents is, actually nickel is tight. 17 cents is, if you're scalping thousands of shares, actually 17 cents is pretty big, but hopefully it's still alive. Is it coming to life? What I do, with these trades is the goal is to have them be all day long, all session long runners. So, if I'm in here and it closes the day at 4, get over $100 in that. If it stops me out on the front end, it's break even, or I'm slightly in the money. That's what you want, is minimal risk and decent potential return. What you don't want is maximum risk, like these kids trying to teach you guys trading thousands of shares of low float under $10 stocks, because the risk is just too much, especially with cheap stocks that can get circuit breaker halted. Well, thanks for sticking around, guys. I'm just curious to see how this story plays out. I don't know if I don't think it took me out yet. Let's take a look. I'm still alive. So if it loses the 60, so what? 17, all of $17. That's another thing that differentiates me from other day trading educators, is I'm all about the tiny, you might say ridiculously tiny, but risk to me, I like my stops to be under, $50. I don't like stops that are over $50, because that will blow up your trading account if it repeats itself too often. So having blown up trading accounts before, that sucks. And it's hard to explain to family, you lost how much money? How many of you have ever concealed trading losses from your family and friends? Whenever I ask that at a money show, I always get all these nervous laughters and all that kind of stuff. Hundreds of people out there in the audience. If you conceal trading losses from your family, then you're trading too much size and you're not trading right. So it's better to holler downstairs, hey honey, another $800 day, than hey honey, I lost $1,000. So okay, so I'm probably out, right? So that's good. So no harm, no foul. Market's still kind of chopping around. I'm going to wrap up for the weekend. One thing to pay attention to is, that's why I don't like cheap charts. I made money today on it, but not much. I'll call it scratch, right? For all intent, the two trades between the two of them, scratch trades. So not a great use of my time. I prefer charts that have multi-point runs, which is why I prefer charts between $15 and $40 a share. Now, I know some of you like trading things like Apple and Tesla, and that's all well and fine, but the range for the dollars you got to spend for the shares isn't good. Charts like Carnival, though, are a little better. I called the long this morning at 1480 for my members. It's almost there. It's not quite there yet. It's knocking on 1480's door. High day breakout alert. So anyway, I know I'm running over time. Y'all take care. Have a great weekend, and I will see you in our next session. And again, for more, join my live room. It's only like $7 for 3 weeks to test it out for a trial at tradingtheopen.com. Have a good weekend.